Hey, what up guys? This is Jay from swimtrading.com, aka the Swim Trader. So sincere apologies as I have not been posting this video analysis for a few weeks running because of my traveling schedule. I was first and foremost on holiday, then I have to fly to different countries to run my swim trading seminar largely across Asia. Okay, so in fact today I just finished a batch here in Singapore and I'm going to look at the current market with you, and I decided that hey, I'm not going to skip any more sessions. All right, so right now what you're staring at on the screen, it is the S&P 500. So on the S&P 500, let's look at what news are we expecting in the coming week. So in this coming week, if you are trading currency, then of course you have a few heavyweight data such as the consumer confidence, the final GDP, then the FOMC press conference, core durable goods, personal spending, so on and so forth. So all these red color markers over there, all right? However, on the other hand, if you are just trading the equity market, which is the stock market, then you should only be worried by this one, okay? The FOMC press conference, which is happening on, I believe it's 11:45. There's something wrong with my time settings. So on Thursday, 11:45 a.m. Eastern Standard Time, that is where the FOMC press conference is going to happen. So if you see this, then what does it imply? If you're going to take day trades, if you're going to take, within the day, the kind of intraday trades, then yes, you should be aware and you should avoid. In fact, that's my style to avoid. Maybe that's not your style, all right? But if you're taking like swing trades, you're taking position trades, then I don't see any reason. The only thing that you should take note of this is maybe refrain from entering position nearing the close of the week. So in fact, if you're taking a swing position, if you're taking a position trade, then I think you shouldn't be even going in during the close on Thursday and Friday. You should be looking at the first 3 days, and usually the first 3 days would have presented you with the opportunities if there are any. All right, so this is what we are looking at next week. And on the charts, and first thing first, I will always look at a weekly chart. So if you have been following my website, even though I have not done this video, I have been posting about what I think about the market updates, but of course in pictorial and editorial form. All right, so based on this, let me do a very quick recap. This was the first resistance in 2018. So that was the January 2018 crash. And then after that, going by this key zone over here, you can see that this was a false break. So it didn't survive. And then after that, it came down. Then it did a false break again. Then it did a pullback. And right now, it seems to do a breakout and a very solid retest. So I will just write there as RT, okay? So RT, a successful retest. Right now, it seems to be going up and get stagnated by the previous all-time high. So this is typical. And if you're thinking, hey, how come my chart looks different? Okay, because I'm on a weekly time frame, okay? So now, I always make a habit to go on the weekly time frame first before I drill into the daily time frame. And this is why, right? A lot of traders, they miss the bigger picture. They are so engrossed in the finer details, the small details, without paying attention to what is going on in the surrounding. So I urge you to continue to monitor what goes on first. Then you go and look at the small nitty-gritty details, okay? So with this, it is very typical that you can see this is a successful retest of the structure, then a rally, and then it is approaching the all-time high, and now it is staying sideways. So in the coming week, if what I see is this, okay, stagnation around the, on the daily chart, it stagnates around 2990 to 3000 level on S&P 500, then I'm expecting a build up over here and then a breakout thereafter. But is it going to happen in this coming week? I'm not sure. So I think one thing that's weighing down on people's mind is also Pentagon's decision to send in the troops in the Middle East, and that news came out yesterday. So until clarity or certainty has been derived from there, if not, I think the market is still in turmoil. It is still very shaky, and this is very typical of every uncharted territory move, which means every all-time high move. So I've been seeing this all-time high move all the way since 2010, 2011. And That time I vividly remember S&P 500 was only 1,200 points, and there is no reason it should go up to 1,006, and then there's no reason it should go up to 2,000, 2005, 2006, and then right now it's 3,000. So I hear that bullshit all over again, saying that the market, there's no reason it's going to go so high. Well, I call it a bullshit because the past 10 years, that's indeed how it has behaved. So if you have just been short and short and short, I say good luck to you, buddy. All right, so now this is the S&P 500 on the daily. This is what we see. You can see that the R1 resistance is there. What I'm expecting it to do is maybe come back a little bit. I don't think that it is going to come down to the pivot level. I don't think so. But it may come and test this area 2960, where it will attempt to fade the gap, because after all, this is a very brief retest of the gap. I think that there should be more. So a retest of this gap, again go up and launch itself forward up there. So target for this week, I think it is largely sideways. The upper range is 3040, lower range 2960. So this is what I think for the S&P 500. So looking at the broad-based market index, the New York Composite Index. So the New York Composite Index comprises of 2,000 over stocks that are listed on the New York Stock Exchange. So as compared to the S&P 500, which are largely the mega caps, the large cap, the New York Stock Exchange Composite comprises of anywhere ranging from mega caps to all the small cap, mid caps. All right. So if I were to zoom out, you will see a slightly different picture. You can see that on the weekly, right? On the weekly for the S&P 500, we have a very nice breakout, retest, and then seems to be continuing, right? But on the NYA, unfortunately, we are not seeing this. This was the high that was made in 2018. So if you have been tracking the difference between the two, you will have known that the December 2017 rally or the early January 2018 rally was mainly pushed by the small companies, the small caps, the mid caps, all right? It is not so much pushed by the large companies. The large companies was lagging, in fact. So now, looking at this, right, you can see that there's a very, very nice resistance zone over there, which is around the 13,200 level. And it has not formed an all-time high. So this was the previous resistance last year, November. And then this was the resistance this year in July. So you can see that July, it went sideways, and right now it is not even close. So I'm looking for it to test this level. So what does this say about the market? Well, think about this. If you have SPX and then after that you have NYA, the NYA comprises of all from the mega all the way to the small cap, whereas S&P mainly they are the mega, okay, the mega all the way down to only the large cap. So mostly it's like this. So if you compare between the S&P 500 and the New York Composite, what you're going to get is this. Who is leading the rally? Is it the good big mega companies, or is it the slightly second tier middle, the medium size or the small size companies? All right. So this gives you an idea of the risk on, risk off appetite of the market participants. Okay. So that's for the NYA. Looking over to Europe, I think Europe is very convincing with their weekly, because you can see that this one, it seems to be, bouncing off my trend line, the yearly pivot point, and then right now it is heading towards the R1 yearly pivot, which is somewhere like 12650. So this is my target for DAX for this coming week, okay? And if I were to change this to daily, you will see a nicer picture. You can see that the monthly R1 has been broken, retested, force broken, and then it seems to rally upwards. So 12650 is somewhere here, coinciding with the previous cluster all-time high over there. So I'm expecting this week to go up there. Not much of a reason for it to come back down unless we get adverse news from Europe. So this is one scenario. The second scenario is this is a shoulder, this is a head, and then this will eventually become a shoulder too. And then after that, it comes back down like this. So that is less probable. I prefer to go with the trend, and you can see that the volume has been healthy. This is crazy because on Friday, you can see every session, most of the stock have this very high spike in volume. But what I am encouraged by is that during this rally, you can see that the volumes are increasing as well. So this rally is attracting transactions that are of value. So this is why I think things over the Europe side is starting to look good. And yeah, and I'm more bullish on the Europe than on the New York, than on the US right now. So coming over to Asia, if you look at Hang Seng, so looking at Hang Seng, the weekly, you can see that Hang Seng weekly is no doubt undeniably in a downtrend, and it seems to be a dead cat bounce, and then it's slightly coming lower. So maybe I'm expecting it to test here. If not, well, it can come down and test 2,450, 24,500 level. Sorry about that. Or if not, it can break above and test the pivot area of 28,000. Okay, so this is on the weekly, definitely downtrend. I'm favoring the downside rather than a bounce. And on the daily, you can see that this is one ugly chart. Why? Because you can see this gap, and then after that it gaps up again, and then it gaps down, and then it gaps down. It's like, I do not like charts with this kind of, lack of continuity. However, okay, having said this, this is the neckline. This is the neckline of the cash index. So you are looking at 26,400 level. On Monday, when it opens, at very best, okay, this is the monthly pivot, I would expect it to come down to here, which is 26,000 plus. Okay, ideally, off the 26,000 plus, I would want to see it bounce up and then head over to my eventual target for the week, which is the R1 monthly level. Okay, so this is there, and I think that it is going to bounce. It has a chance of coming down first and then bouncing towards the end of the week. So that is on the Hang Seng. And then now on Singapore, ugly looking chart, isn't it? This is the reason why I don't trade Singapore stocks, even though I'm from Singapore. I do investments in Singapore, but I don't trade the stock. First thing, the volume is low. Second thing, the market is just not so nice, right? So kind of sad. Looking over at gold, looks like it's going to be a bullish U-turn, okay, a rounding bottom over here, which tested the previous cluster low, coincided with round number 1,005 pivot level over here. First target for gold, it is 1560. Second target, it is 1590. Okay, so that's the R1. So that's my second target. And if gold is to continue to go up, this would imply that the S&P 500 would come down. So going back to that, I wouldn't be surprised if it comes back down like this, test the gap, see how it behaves before a bounce will happen, or continue to come down. Okay, so the outlook for the US market for the next 1 to 2 months, I think we still have some room to go. However, having said that, we may be at a short-term breath, extended level for the breath. So having said that, I am not expecting much of S&P 500 this week. What I'm expecting is break this previous all-time high, maybe to 3040, then come back down. This is totally possible, and then retest the gap 2960. So these are the key levels that you should be paying attention to for the S&P 500. Okay, so with this, I hope that you can trade safe, and I will catch you next week. And probably next week I'll not be able to have this video because I'll be having my class over in Thailand. So probably in the week after next, I'm looking forward to see all of you again. So trade safe, and I will catch you soon. Goodbye.